This is Sean Golding from Golding and Golding. The topic of today's presentation is IRS Form 14654. Those of you unfamiliar with this form, it is used by individuals, trusts, and estates who are submitting to the Streamlined Domestic Offshore Procedures. It is the key ingredient to a streamlined domestic submission. It is very important. For purposes of the lecture, I'll just refer to individuals, but it could also be a trust or an estate. When it comes to Form 14654, there's three main components to it. Why don't we go through them together? The first one is tax liability. It's easier in the sense that all you have to do is figure out what the tax liability is for each of the last 3 years, and then you include that on the form. And for each year, you may also have interest due, so you have to estimate what the interest would be for the liability dating back to the year that the tax was due. So if all the tax liabilities were the same, tax liability back in 2016, the interest accruing would probably be higher than it would be if it was 2018. Items such as the foreign earned income exclusion and foreign tax credit, you're allowed to use those. So at the end of the day, many people who would otherwise have a tax liability may not have any net income tax liability once the tax credits and the exclusions are included. Now, excuse me, the penalty calculation. The penalty calculation is a little difficult, but not impossible. Essentially, what you have is a 6-year calculation compliance period. 3 years for tax returns, 6 years for FBARs. So what you do is this. You have to get the December 31st value for each of the accounts or assets. Unlike doing a traditional OVDP, voluntary disclosure, or just completing an FBAR timely, you don't use the max balance. You use the year-end balance. It also helps to prevent duplicating balances. So what you do is this. You look at the year-end balance for each year in the compliance period. Then you aggregate the year-end balance for each year, so you have one total aggregate value of all of your year-end values of the assets and accounts per year. You then take the 1 year, not all years, just the 1 year that's the highest, and you multiply it by 5%. That's your penalty. Non-negotiable, non-waivable, but not every asset or account is included in the computation. For example, Canadian RISPs and RIFs, RRSP, RRIF, those are generally not included in the penalty computation. Likewise, so those are exceptions. There's also exclusions such as real estate. Individually, that's the key word, individually owned foreign real estate is not included. If you have real estate as part of a Sociedad Anonima, BVI, Hong Kong Limited, it's owned by an entity or something similar, then you do have to include that as part of the value of the asset. Finally, and the one that scares people the most is the non-willful certification. The most important 2 words when writing this form is tight and concise. The IRS doesn't want to know all the warm and fuzzy reasons why you love the US. They don't care. They want to know for this purpose that you're non-willful. So it takes several versions of writing it. Generally, you should be able to dwindle down your first few drafts to somewhere between a half a page and 3/4 of a page, depending on each particular person's facts and circumstances. Just because you didn't write 4 pages doesn't mean anything. You may not have 4 pages worth of information that's important when preparing your streamlined certification. The other issue is that it must be accurate. Now, key phraseology you hear is you don't want to make any intentional misrepresentations. At the same time, you don't want to make any material omissions. So just because someone, the main way someone misrepresents something is they write something that's false. But if you knowingly and intentionally don't put in a key piece of information that would change the story, then that's called an intentional omission, and that's another form of misrepresentation. The reason why all this is important, and a common question we get is, well, why is the IRS going to believe me? Well, because you're signing it under penalty of perjury. Any experienced attorney will tell you signing it under penalty of perjury is important. You're making a declaration to the IRS and with the Streamlined program, you are proactively going in there and making a certification statement under penalty of perjury, so it's not the time to lie. This is Sean Golding with Golding and Golding. I hope this initial presentation helped give you a general idea. We have tons of free information on our main website, which is goldinglawyers.com. We also have a sister website, IRSStreamlinedProcedures.com, which, as you guessed, is specifically for the streamlined procedures. Again, this is Sean Golding. Thank you for your time. Enjoy the rest of your day.